Clifford Bennett, Herston Economics. Well, we're starting what should be another grand bull market week. What we've seen over the last few days has been all good news. Egypt all resolved on a path as we thought it would be. Last week we were saying buy the pound, buy Egyptian equities. If you're in that market, definitely it was a time to go long. You've missed the absolute low, I'd say, but it's going to be a long sustained uptrend, I think, for Egypt from here over the next year for both their currency and their equity market. In terms of the politics there, the army's in power, a shorter time horizon for fresh elections. It's all good news. In the US, we had good news as well. US consumer sentiment up again, looking very strong. Another survey that came out regarding how Americans feel about their job security, which I think was by CS First Boston, forgive me if I'm wrong, but it suggested that Americans have never been more confident about keeping their jobs since 1984, those who have them. So the outlook there is exactly the Herston economic scenario that we painted all of last year, which was that the US wouldn't have a double-dip recession now, as everyone thought back then, but in fact we'd have a fresh economic boom taking hold in the US, driven largely by those who have their jobs, the 90% of people who are employed, keeping those jobs, becoming confident about those jobs and going out and spending. That's exactly what we're seeing, and finally it's showing up in the data. Remember, the data always lags reality, but certainly we seem to have got that view right, and the US economy should build on that this year. Also in the US, we've seen the 30-year Treasury yields hit a 30-month high. Again, that's what we've been arguing all the time. Monetary policy will remain near zero. You know, the Fed's rates will remain near zero, and that'll be the case in Europe as well, you know, around 1%. And Australia's obviously gone completely ballistic and off the map in terms of its interest rate hikes, but hopefully the fact that the others are staying stable will keep it stable here. Regardless of all that, in terms of official rate policy, the long end is going to continue to get more and more expensive to borrow as the economy picks up in the US and all around the world. There were some headlines about German inflation accelerating. You would have seen those around. All that happened was that German inflation over the year ticked up from 1.9 to 2%. So again, all good on the inflation outlook. Again, that other Herston economics scenario of high commodity prices not feeding through to inflation seems to be working out well, and we maintain that view. Rubini's come out, tried to panic the world about something else, saying he's got the world depression thing wrong and the double dip all wrong. He's come out and said that, you know, food price rises are going to topple governments in Asia and all that sort of thing. What a load of nonsense. You know, wages are still so low in Asia and Latin America that they can have high food inflation. They can increase wages by big chunks of percentages, but they're off very low bases, so they're still very low amounts, so companies still continue to make tremendous profits, and the economic boom continues even with paying more wages so people can afford higher food prices. So I don't think it's going to be a problem at all. So the markets look very good this week. Gold, oil's a little bit low. We might see oil, I said, towards $85, $83. That's a great buy. But overall, everything's looking quite good this week. And our equity market really has to start to accelerate yet again from current levels. Have a good week.